Hello everyone, my name is Stefano Grancini and this is Connected, the podcast of Nova Economics Club. This podcast is done in partnership with Fidelidade Studio. A special thanks to Fidelidade for giving us access to their studio and equipments. Today we are going to talk about the last American elections with Professor Pedro Brinca, Assistant Professor of Macroeconomics at Nova SB. Welcome, Professor.
Thank you.
And today what we're going to do is to try to go beyond the political scenario and to see how the economic scenario is going to change in America. In the last 4 years, the Trump presidency was marked by liberal policies like the reduction in the individual income tax or the implementation of a flat corporate tax. With the new presidency of Biden, what can we generally expect to be different in terms of economics policy?
Well, Joe Biden already ran on a platform where he's going to revert some of those tax breaks and that Trump did during his administration. So in particular, companies making more than an X amount of money will pay a lot more taxes. You're going to pay more taxes on income from abroad, and a standard analysis of all these policies basically tells us that it's going to be the top tail of the distribution that's going to have the biggest burden of these tax increases. I think that during the Trump's mandate, we saw a strong surge of the stock market. We observed that compared to most of the other rich economies, let's say the G6, the six richest economies besides the US, the performance of the US companies on the stock market was much stronger. And I guess that reflected all those tax breaks that Trump did. On the day of the election, actually, the SP 500 increased markedly, and has become steady since then. And of course, I mean, there are many theories, or we can make sense of that in many, many ways. But I think one thing is that even though Joe Biden won, and I think that brought a little bit less volatility to what to expect in terms of economic policies. It also probably Joe Biden will have a very hard time passing many of those increases in taxes and so forth, because his victory in the Electoral College was not as reflected in the change of the composition of the House and the other institutions of the US political system, which might not allow him to pass all the legislation that he would like to.
Yes, so as you said, in the last 4 years, the Nasdaq 100 and the S&P 500 went approximately from $2,000 to $3,607, despite also in the last period the huge negative effect of the pandemic. Do you expect this same behavior also with the new presidency?
I mean, if I could predict the stock market, I wouldn't be here talking to you, right? I would be busy investing and being rich. The economists are not famous for making good predictions. But I guess the most basic thing that we can say is that a good part of the rally in the stock market during the Trump administration might be connected or might be related to the tax breaks that, of course, increased profitability. If some of those tax breaks might be reverted, of course, we might expect a less dynamic surge in the stock market indices. That follows naturally. On the other hand, it's good to notice that even though the stock market performance of US companies during the Trump administration was very strong and stronger than most other rich countries, we also witnessed a drop in foreign direct investment. So the share of foreign direct investment that was absorbed by the US dropped markedly during the Trump administration, which might be a reflection of some of the isolationist and protectionist policies that he pursued, the trade wars with China, with Canada, with Mexico, with the European Union. So that the reversion of that stance might actually be helpful on one hand. On the other hand, it's also good to remind ourselves that the Trump administration, even though they did cut taxes, and that helped pave a strong stock market. It also increased a lot the budget deficit. Okay, so in some sense, you kind of transfer resources from um, the U.S. government, if you want, to the stock market, right? Because you have the stock market going better than average compared to all the other rich countries, and while all the other rich countries were kind of consolidating their budget position after the sovereign debt crisis of 2011, that was a trend that started then. The U.S. went the other way. I mean, after Trump took over, it seriously kind of decreased the sustainability of U.S. Debt, right? So that could also mean trouble for the future. So we'll see. I mean, again, economists are not the best to make forecasts.
Yeah, also because the budget deficit is going to increase a lot in the next period because of the situation.
Yeah. So that's one thing. So before the pandemic, I guess this was a reasonable analysis to do. I guess part of the intervention now on sovereign debt markets by central banks will probably give a little bit more room for these deficits to happen. And I think there's a political will for that to be done. I guess one typical concern about these things is always the sustainability of the deficits, and second, or the public debt, sovereign debt, and the second one is whether it's going to generate inflation. Okay, and one thing that happened, I guess even what I teach at Nova, was that in the 2008 we had one of the biggest, 2008-2011 we have one of the largest monetary expansions in modern history of the West, at least, and we saw no inflation. So prices didn't pick up. So I guess people today feel much more confident in times of crisis to intervene, in a decisive way, to give liquidity to countries, to companies, than they were in 2008. In that sense, you're right. I think that probably the fact that the U.S. was already kind of on a different trend from the rest of the rich countries in terms of getting the public finances into shape might not be as big factor as it probably could have been before.
Yes, and trying to go more on the social changes, we know that during the campaign for the Democrat Party presidential primaries, there was massive discussion around the democratic socialism, a way of governance that has never had any expression in the US. And so this discussion brought up other social issues in the US society, like the health system, and for which some members of the Democrat Party have been demanding a serious change over the last year. So what's your opinion? Can we expect major social changes in the US?
I mean, the problem with America and the US is that it's becoming more and more divided, right? If you segment it by gender or you segment it by race, you see how divided America is. If only black people voted, all states would be Democrat, for example. If only white men would vote, Trump would have won by 200 electoral votes. So America is deeply divided, and this can be reflected into strong partisanship in the chambers that will enable or not Trump's proposals, legislative proposals. So that's one. So the second one is, I think this crisis kind of showed the limitations of private insurance. What do I mean by this? Typically, private insurance markets are very efficient at managing risk, okay? But individual risk. Let's say that, all of us really need a car to go to work, and if we don't have the car, we can't go to work and we can't have money to sustain ourselves. So you're really kind of, afraid of having some problem with your car and then not being able to work. If you're in such a situation, you put aside money just in case. If your car breaks, you can buy a new one. Okay, that's very inefficient to have such resources just idle, just in case, because, it's much more efficient to have an insurer that collects a much smaller amount from you every period and, pays to the few people that are actually going to have a car crash, right? So private markets for insurance typically work well in this context. Of course, the issue is, when all cars hit at the same time. And that's basically what happened. People got very surprised that most of their private health insurance plans didn't cover pandemic-related illnesses. And that's expected because, if we have a common shock, something that shocks everyone at the same time, the private insurance company will go bankrupt, period. That happened also with, it's not just about health insurance, it happened also, for example, in the Great Recession with the credit default swap. So also the financial insurance, if you want, markets also kind of, were unable to prevent the destruction, the economic destruction that we observed. So people are well aware of these limitations of private insurance that became very obvious. At the same time, people are much more confident in government intervention in the economy, or at least the need of government intervention in the economy to deal with questions like coronavirus, right? So I think this creates a political climate for more government insurance, and one of them can be, as a form of walking towards a more universal healthcare system. I don't think that we will see anything close to what we have in Europe. But I think that we will see more and more political will behind the idea of at least having some sort of government-backed plans, even if they are then provisioned by private companies.
Probably regarding the health system, you will follow what Obama already started in the previous administration. And again, the promises of Biden will have an impact on the financial markets regarding if he applies what he says.
Yeah. I mean, that's for sure. And that goes to what I said at the beginning, right? So if Biden says, I'm going to raise taxes on corporations, I'm going to start taxing income that comes from overseas at a much higher rate, I'm going to close a lot of loopholes. I mean, we have to see that in America, we got to a point where the richest individuals sometimes pay less taxes than, an average Joe. And when you look at effective tax rates, they're very different from statutory tax rates, right? Because there are a bunch of loopholes that you can always explore. And I think on the Democrats, there's notion that something has to be done about that. But of course, it will be at the expense of, companies' profitability. If you increase taxes, you decrease the value. I mean, it's as simple as that. So I think to the extent that part of the overperformance of U.S. companies during the Trump administration was linked to the decreases in taxes, you could also expect some more modest performance based on the same mechanism. If you increase taxes, of course, firms' profitability will go down.
Yeah, and moreover, Joe Biden promised during his campaign that if elected, the US would rejoin the Paris Agreement. In fact, Trump's lack of action and interest in climate change was one of the Democrats' main flags against the current administration. So what will be the new role of the US in the worldwide fight against climate change?
Well, I think the new stance of the US is going to be more broad than just climate change. Of course, climate change is one of those divisionist kind of, divisive issues in the US. So if you ask Republicans if they believe in climate change, about 80% say that they don't. But if you ask Democrats, about 80% will say that they do. So that's one of the stark contrasts on these divided states of America that we have today. But what I think is that more than just on climate change, this Democrat administration will most likely be different in the sense that it will have a much more multilateral approach. For example, against China, in the whole 5G story, in the trade agreements, on national security, and also on climate. And this means that I think there will be a new room for U.S. diplomacy to leverage a lot of U.S. soft power in terms of the traditional allies into the world stage. And so what we are talking here about climate, I think, is more broad and reflects a more multilateral, grounded on soft power, diplomacy with the traditional allies way of US influencing the world stage.
Okay, thank you. And just a last question regarding monetary policy. Do you think that something is going to change during this year?
Well, what can change, right? I mean, there's not much to change. You have the interest rate really low, so you have the close to the zero lower bound. So it's not like you can charge much lower nominal interest rates. The real rate many times is even negative. you'll continue the asset purchasing programs by giving liquidity both to Wall Street and to well, not Wall Street in Europe, but the equivalent, and also sovereign nations. So I don't think that's going to change much. I think the only really interesting kind of telling moment of monetary policy by the ECB this year was when Christine Lagarde on March 12th made the first public speech about the pandemic and what the ECB was going to do about it. And it was interesting because she wanted to contrast her intervention in the economy with what Mario Draghi did in the sovereign debt crisis, right? So we all remember that in around April, March of 2012, with sovereign interests really high and threatening the sustainability of public finances for all these countries in Europe and threatening default, Mario Draghi just said that famous sentence that he would do whatever it takes to save the euro, and believe me, it would be enough. Okay, so these were his words. So a couple of months later, they introduced outright monetary transactions, which is a mechanism created by the ECB that, in layman's terms, basically assures that if a country get in trouble, in certain conditions, the ECB would go there and finance their deficits. Okay, that alone was enough. It was never used, the OMT, the outright monetary transactions. That mechanism announcement was enough for the sovereign debt risk premium to collapse and inject some rationality in the market, right? So Lagarde on March 12th didn't think this was such a moment. So she came and she said, well, we're not in the same kind of situation we were in 2012. And kind of hinted that the ECB was not going to take like a strong stance to fight coronavirus. The markets went crazy. So in 6 days, sovereign debt interest risk premium for Italy, for France, for Portugal, for Spain skyrocketed. And just 6 days later after she says this, she has to come and make another announcement just to say that she's going to come up with a PEP, the Pandemic Emergency Purchasing Program, and increase the support plan that she presented just 6 days ago by 3 or 4 times or 5 times. So it went from 150 billion to 750 billion euros in just 6 days. So just like in the sovereign debt crisis, managing expectations matter. It matters on financial markets, as we saw with Christine Lagarde kind of tiptoe dancing, and it matters in the real economy. We all remember the toilet paper crisis, right? Where toilet paper kind of disappeared, not because there was not enough toilet paper for everyone, but because people start getting afraid, that it would run out, and then it becomes a self-fulfilling prophecy, right? And I guess managing expectations in this way has become determinant to avoid those self-fulfilling prophecies.
Thank you so much for being here.
Thank you.
It was a pleasure, and see you guys to the next podcast.